This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining us today is Mike Whitlow, the MD of ECR Minerals. Following news this morning just before Christmas here that ECR has entered into a non-binding heads of terms with Octo Holdings Pty Limited for the proposed sale of its subsidiary Mercator Gold Australia in a deal valued at 4.5 million Aussie dollars. Well, thank you very much for your time, Mike. So this is sort of it then. This is really the conclusion, I suppose, as close as you can get to on these tax losses.
Yeah, absolutely. It's a great piece of news. We're really happy. We've got to a point where we've got an agreement to sell other non-core assets through the period of time we've been with the business, and this is almost like the culmination of 14, 15 months of work to get us here. So yeah, it's a great piece of news. We're thrilled by it, and we think that puts the company in a really strong position moving forward now.
Good. So, I mean, in terms of the structure of this deal, I mean, I guess a lot of discussions were going on in the background, back and forth between lawyers, etc. Can you just elaborate a bit more on the specific structure of this deal and perhaps what other options were available and why this is the best outcome, you think, for both the company and for shareholders?
I'm not going to go into the structure of the specific deal because I don't want it to impede us in any way, shape or form. What I would say is if we were to sell these tax losses as part of the non-core disposal, and that the terms of that sale were based on utilization, i.e., the buyer would make a payment per annum as they utilize the losses. We may have been able to get a greater figure, but it would have been over a much longer period of time. Our view as a board is the market has been depressed for quite some time. We believe that this board of directors has the ability to go and identify great opportunities, whether that be by accelerating and advancing our existing assets or looking at additional opportunity. And what I mean by that, Mark, is whilst the market is depressed and stressed, cash on the hip and a pound in the pocket is worth a lot more today than it would be tomorrow or indeed the day after. So for us, it was really important that the terms that we came to an agreement on meant that the cash consideration would come pretty quickly. And as you can see from the announcement today, January and March are the dates that have been earmarked for that. And, it puts the company in a great position and a really firm standing. We had raised some cash a number of weeks ago, and that funded the company through to 2026. We've got ideas about where we want to deploy that capital. Now, with this additional opportunity and the other disposal at Brewin Lane, we've got a real war chest to go out and look at how to accelerate again our existing assets. Lulworth's fantastic. We've got a number of drill targets that have been identified and ranked, and we think that the news flow and the direction that we're going to take the company next year in, it's going to really catch people by surprise. And I've said this many times, if we want to see this as a company that can do 10x and we can reward our shareholders and ourselves as shareholders, and of course, perhaps some of the investing community that have had some, sort of doubts and pessimism over the years, in order for us to do that, we need to be in a strong sort of shooting position, and we feel that we're there now. The foundations of this business are good, and the ambition of the board is particularly enthusiastic.
Good. Okay, good. And is that everything sort of completed now, Mike, or is there still perhaps a risk that it won't complete?
It's about as complete as we can get it. I think, having spoken to all involved, very, very confident. I mean, as with all things, Mark, one must always manage expectations. There's a risk associated with everything in markets. It's why we have compliance. It's why we have, advisors that encourage cautionary statements. They exist for a reason, and we respect that. If they didn't exist, I'd probably be whooping and hollering right now and saying there's no way that this can go wrong. But we know from experience there's always a slight or slim risk. But to get to this point, the back of the deal has been broken. We're over that hump and hurdle. We've got into an area actually a number of months ago. We'd advanced beyond anybody else that's been involved in this company in the history of the business who have perhaps looked at these accumulated tax losses or the non-core assets and said, look, these have been hanging around our neck, or indeed there's a great opportunity and we want to try and exploit it and do something with it and expedite this potential for sale. And they never got in touching distance of where we were probably in the summer of this year. So the fact that we've got to this point now, we're very, very confident. We're really, really encouraged by the dialogue that we're having and the terms that we've agreed. And we hope that the market shares that enthusiasm, but more so, as I've touched on, it's where we can go now as a company moving forward. That's what we're looking ahead now at 2025. We've got a great opportunity in Queensland in particular, and we will not be limited to just those assets. We've found that, unfortunately, when we talk too broadly and we cast the net widely, the market starts to lose concentration. It perhaps loses focus. So right now, let's focus on the job in hand. We've got Blue Mountain. We've got the assets up at Lulworth. We're going to get out there. We're going to start making a lot more advances on bringing this company into a producing revenue story. And indeed, we'll continue to look at some really big opportunities in order to give us that 10x type return that the investment community want to see. And from a very strong financial base. Thank you, Mark.
Yeah, thank you very much, Mike, for joining us today just before Christmas. I look forward to indeed following those plans being executed in the first sort of part of we start the next year. So thank you very much for your time, Mike.
Yeah, take it easy. Merry Christmas and thanks for the support this year.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.